Okay, is the video now good? Can everyone see that as well? Hey, you're welcome, Paul. No problem. Okay, great. Okay, let's get started. So I didn't get to do a trade review. After I get through the executive summary, I'll go through it. But essentially, yesterday morning was Chop City. There was not a lot to do outside of some quick scalps in the morning, unless you could just simply handle sitting through that uptrend that we had all morning long. Importantly, this uptrend is still intact here. That essentially started on, let's see, we're Thursday, Tuesday, and we've been carrying up since then. And so the first thing that we need to see is this bottom end of this channel broken to have any kind of downside. It's rare that I put the channel on the chart itself, but we do need a downside break in order to see a resolution to the downside. The other thing is that we're right in, if you look at yesterday's chart, this entire area was the area of a 50 to 60% retrace from Friday's high. We've now achieved that. And this morning it looks like we're backing off trade-wise. Let me see where we're sitting right now. Looks like we are sitting at 1863 and a quarter. Hang on 1 sec. Let me get my trading tools up. Drawing tools. Okay, so let's spread this out a bit and go through. So, first thing I want to note on the downside, these two zones these three zones are sitting on top of each other right here. This 32 and 3/4 to 34 and 3/4, 31 to 29, 27 to 25. If I had to get rid of any one of these zones, it'd be this one right here. It's been tested 3 times. If we come down, that'll be the 4th test. It works just like a zone, right? 1, 2, 3. It doesn't mean that it will break or that I anticipate it breaking, but it's just been tested enough that I'd rather not trade there and get caught. If I were to trade here, I'd have to see something like tick divergence and an in and out there extremely quickly. Okay, so right now our opening puts us at, let's see, 63.75, roughly right here. Excuse me. 1863.50 puts us right in here. Okay, so all we are is just falling right back into this channel that we closed outside of yesterday afternoon, which makes sense. So I would not be surprised early to see a test of Globex high. If we get a strong enough rotation in, meaning if we can downside test first and then roll up and get a 6-point rotation into Globex high. This is assuming that we're not having an open drive higher, which I'll cover in a moment. I'm probably willing to take a shot at Globex high with a 2-point stop behind. Okay, so let me define what that means so everyone's clear. The hardest areas to trade are often in the first 30 minutes of the day. Okay, and so that means if you take a trade here, there's a couple ways to handle it. Either do it on reduced size. If you're going to do it on normal size, be prepared to get stopped fairly quickly at 2 points. The cool thing about this is if you nail it right and it turns out to be the high, it can really rotate out of here, give you your 2 points pretty quickly, and give you trailers if we're going to make a move back to the downside, right? The uncool part of it is you can get stopped pretty damn quickly. So usually I'm able to garner a trade out of here, but it's usually an aggressive trade, and I do not call it, mostly because I don't have time to call it. And it's difficult to set up and make it, quote, easy. How do you decide if you're going to take a trade here? Well, if it's going to ruin your day to get a stop in the first 4 minutes or 5 minutes or 10 minutes of the day, don't take the trade. The easier trades are always further away from where we open. And usually you want to look anywhere from 7 to 10 points away in either direction. That'll let the market get a good stretch, and it'll give you a clear opportunity to get into the trade. So, that being said, what do I expect for today? So the first thing I want to show you really quickly here on this volume profile, let me get rid of all the junk I have on there. Okay. On ES, you can see quite clearly, it doesn't take a rocket scientist. Come from the top here, come all the way down to the bottom. We're sitting right between 50 and 60% retrace. This is obviously not a corporate secret or anything else everyone knows about Fibonacci and 50% retraces, okay? This is perfectly normal to have retraces like this. And I'm going to give you an example of that right now. Okay, so when you look, this is a daily chart. See this swing from here to here? You simply take this and you go like this. Long tool. There we go. You take it from here, you move it up to here, move it right here. You get halfway back, you tend to get responsive buyers. Okay, it obviously doesn't pinpoint it. This is obviously a very, if you look at it, it's a daily chart, right? So this is almost 7 points of range from top to bottom. So obviously to do specifically what I'm doing, which is a concentrated leverage trading, you have to, you need to be good at pinpointing your trade entry. However, right, in a larger sense, the finding responsive buyers or responsive sellers, once you've retraced a move about 50% the first time in, is not uncommon. It doesn't mean it'll stop there or it has to go back to the highs or anything else. It just means it's not uncommon to find responsive buyers first time into the zone, just like you did here. We traded in, we traded back out, that was that, then it continued on its way. So without going into great detail on that or how I use that to set it up, let's go back to our chart. So we know that we're sitting right in here at that 50 to 60% retrace. Also, the other thing that we know is that markets, this market in particular, has tended to make mirror moves. So it would not shock me. We've been up for 2 days in a row, and it would not shock me to see the inverse of this move back down here. Now, it may not happen today, it may not happen at all, but I'm prepared for it. So let's discuss the scenario that would look like. So, going into that, with that theme in mind, okay, we open up at 64 and a quarter. First thing I want to see is NQ leading or is NQ following. Secondly, this 67.50 right here, obviously to get any upside, we got to get above 67.50. So I'm going to see if we reject, and if we reject, are we able to get above and hold above Globex high, right? Obviously, I'll be looking for a trap trade, meaning we trade above, then we trade back below. If we trap below, obviously the eventual target would be back on the other end of the range, down at Globex lows, right? That would be the initial trap trade that I would be looking to set up if we get it, right? The next thing is, if we open drive higher, what's the other thing that could ruin that concept or make it so that's not going to play out? Open drive higher, categorized by one solid candle up, usually somewhere between 5 to 7 points, or 3 smaller candles that drive up like this. Now, these two are textbook, okay? It can happen other ways, but this probably encompasses 80% of those drives, okay? It is important to note that on what has appeared to be open drive higher in the last 2 weeks, we've gotten moves like this that have been countered with moves back the other way like this before continuing on its way. So that doesn't negate the open drive higher. It's just if I see that, I get cautious and I'm not going to necessarily look to fade it. Usually we can get a setup after we see this. Also, I'm not necessarily going to look to chase it. It's been a new behavior, and I'm not exactly sure how to gauge it, other than the way I have been gauging it is setting it up as a trap, either from the downside or the upside at Globex highs and lows. And so at any rate, that's how I've been looking to set this up. And specifically, okay, so I need to make a modification here just so everyone can do that on their own charts. This is obviously yesterday's high right here at 66.50, and you need to add that to your chart. Make it, heck, I don't know, let's just make it red, but we'll make it a different style. Okay, so that's actually the high. This is the zone, 67, and then we need to move the bottom of the zone, 67.50 to 65.50. Okay, but really the area that I'm concerned about here are these 2 points right here. And obviously, if I trap below Globex high, really what I want to see is a trap below Wednesday's high. I'm not so concerned about, at this point, the trap off of Globex high. Although I will look for rejection there and then back below to ensure the trap back lower, right? Okay, so concern again, open drive higher. What am I going to see there? Lack of rotation down. If we're gapping, which it looks like we aren't actually. So there will be no gap fill to worry about. It'll be we're up a quarter at 8:04. So unless we move significantly into the open, the gap will not be a concern today. So open drive higher and or open drive lower. Excuse me. Open drive lower is my other concern, right? And we can generally tell these in the first 15 minutes. I have not looked if there's econ today, so let me check really quick. Hold on one second. Is anyone else having audio problems or everyone hears me okay? I take it everyone hears me okay because I've only had the problem. Okay, that should fix that problem. Okay, so open drive lower, same exact scenario. So we're not going to worry about gap fill today because it's not going to occur. What we are going to look at is whatever the first 5-minute bar is it penetrated, yes or no? That's another key. If it's not penetrated, open drive higher. Secondly, size of counter rotations. And we have a very easy display for this, okay? Pretend like this is the open yesterday. This is the release from the Fed, which, by the way, I hate trading. I'll go into later why. But at any rate, this is open drive higher, guys. By definition, pretend like this is the first bar, this bar right here. Okay? This bar is first drive higher. If the bar looks like this, that's open drive higher. Notice the lack of rotation, particularly relative to the size of the bars. Almost no retrace. Most of this is just simply chopping down, and then we're making another move higher. This is by definition what an open drive higher looks like, only it occurred at 1 o'clock in the afternoon, which made sense. Essentially, the market was on hold till the Fed came out, and then we drove up. Okay, so if you get something like that, up or down, you automatically should be thinking open drive lower. If I'm a conservative trader, what that means is I generally expect in this environment for the zones to still create an area of pause. However, there are occasions where the drive is so strong that it'll just simply move through the zones. If this concerns you, these used to be rare events. These open drive hires, they occurred 14% of the time approximately. That gave you about 2 times a month that you got an open drive higher or an open drive lower, and usually they did not result in trend days up. Usually they resulted in range extension. Range extension is you have your base, you move up off your base, you balance a little bit, and then you roll back to the downside. It's just the inverse of this pattern right here, where we roll back up, which is your most common pattern you have on down days. Okay, so this is what used to usually happen. As of late, going in the last 6 months, we get the open drives and we balance. It's only been in the last 3 weeks that this scenario has been playing out. I still think we're in a two-sided market. I don't think anything's changed. I think we'll be able to trade both sides of this market through the course of the day. So, and that's good news for us. There's not much more to say than that. Identifying the open drive, sidestepping it. If you see this open drive higher, the best way to avoid getting crunched is waiting till after 9:30 a.m. or the first hour's over, and the market will tend to either go into balance and or reverse back lower and or higher somewhere between 9:30 a.m. and 11 a.m. But you tend to get much better rotations at the zones from that point in the day. So, moving on. Areas where I am interested higher. Okay, above here, I'm interested in a short. First time into this 1871 to 1873, I will be taking a short. Same thing with this 1877 to 1879. Above here, okay, from really from 79 to 92, there is a zone in between. But in between these two areas, this entire thing from here down was poorly auctioned. All of this. That's about, what, 10 points? 77 all the way up to 89. 10, almost 12 points of poorly auctioned area. That's where we ripped down from that Friday, and we did not auction that well. What that means is we can easily travel up through that. And let me show you what I mean so that everyone can understand. Let me just simply open Wednesday's charting. Phase 10, I need 9. Okay. Okay, so you can see that we got resistance here. The reason there was so much space between this zone and this zone is because all of this was poorly auctioned, and you can see what the net result of that is. We whipped straight through that. Okay, this is where we began to get well auctioned area, and you can see that first time into the zone, right? It did go through the zone, there's no question, but it did reject out of the zone for a rotation lower. If you took the middle, you were actually able to garner 2 points out of this trade. Okay, and you can see on the backside it provided support. You can also see this area, again, this was poorly auctioned. You can see how it spent time re-auctioning it. This was the next area that was well auctioned. But above this area, this 72, all the way up to 85, 87, okay? And then again, let's see where I marked that, because I think I altered it just slightly. I have 83, 85, and what I might do is actually give me just a second. Let me make sure I got that right, because it's odd that I missed it like that 2 days in a row. Give me just 1 second. '85, '87, and let me check the 24-hour chart real quick. Okay. I think I'm actually going to stand corrected on this, and I'm going to push this back a drop. I'm going to push this to 87 and a quarter to 85 and a quarter. Let me look at that one more time to make sure I got it right. Maybe a little bit lower. Hold on a second here. A little bit lower. Make it 86.50. To 84.50. Sorry about this, guys, but I don't want to get the zone wrong, especially in a critical area. Actually, I don't ever want to get the zone wrong, period. Okay, so this is pretty close, okay? So I might have needed to 9 and a quarter. Okay, so the issue here, I'm actually going to drop this a drop, even though this was the high. I'm going to drop this down just slightly to 88 and 3/4 to 90 and 3/4, and then just put a line up here and be aware. I'll modify this. Be aware that here we'll make this whatever color we want. Heck, yellow. We'll just make it very heavy. This was the actual height. This is actually poorly auctioned here, but if you look at the price action, right, you essentially had structure, breakdown. This would be a breakdown retest front of it. This would be a retest of the back end of this structure here, and it aligns with the 24-hour volume profile. We don't have an open gap in here anywhere, so I'm sorry that I missed that. Okay, and then on the downside, 55. Let me make sure I did not, I apologize guys, I just want to make sure I did not get this wrong. This is right. Let's go back over here. Okay, so there's, I need to make one more note in this. So in between these 2 points here, there's actually a support point probably sitting here at it's probably 51.49. However, it's in the middle of chop, and so I'm leaving a zone out. So if you want to add that, you can. I apologize. Normally, I catch this beforehand, so I don't have to redo it while I'm on with y'all. But I want to make sure I have this right. 814. So there's normally a zone would be sitting right roughly here. I'm leaving it off, but it's entirely conceivable that we come down in here, trade in here, and move up. The reason why is I'd simply rather get a stretch down to the low. If we're going to break below all of this and trap below, I'd rather simply see a retest of Wednesday's low to see if we hold than take a trade in between here. What I end up doing if I put a zone here is I'm stacking. I only have 2 points here and 2 points here. And so I pick this zone as the odd man out. And the reason why I do that is I don't want to have to end up trying to take a trade every 2 points. And so if I'm going to choose 2 points that I think will be stronger, this zone is retest of yesterday's breakout and makes sense for a retest. This is a retest of the low. This is crap. We just chopped through all of this, and I'd rather not get involved. So for those of you who want it, 1849 and a quarter to roughly 1850 and a quarter is the zone. I'm now going to remove it because I'm not going to trade it myself. And I would just rather simply skip it. It's less stress. I don't have to catch every single angle, but there is a zone there, just FYI. Okay, and in here, obviously there's a wide space between 1865 and 1858. There is a support at 1860-62. Again, I am skipping that because I want to see that if we can push down into Globex low, where I'd rather take a trade. It's a higher odds and an easier setup for me down in this area. Excuse me, let me correct that. Below Globex low. So let me put this on there for y'all because it got a little complex. All of this was pretty poorly auctioned, and that's why there's an issue here, because ideally the market's going to come back in and re-auction all of this right down to this spot, and then once we've re-auctioned it, come back higher. That's one possible scenario, right? So there is a zone essentially sitting right here, 1862 to 1860. It's not hard to see. I just don't think it was very well auctioned. I think it could get flushed through. Again, I'm going to be more on the cautious side and have the areas I'd rather trade in. Important note about Globex low. Globex low was extremely poorly traded. We've pretty much zipped straight through it. And when you zip through an area, you can pretty much zip back through it on the way back down. That's why there's not a zone there. It's just simply a single point. I probably will not be trading Globex low for anything other than a trap. And that trap needs to, for me, to pretty much come out of this zone, meaning we find responsive buyers, we get above here and hold, which means all I'll have for this trap trade is a trailer back up because I've already scaled my initial 2 coming out of that zone. So I want to make clear, because I know it's a little more complex than I normally do it. Where we're opening, all of this was poorly auctioned. This is the first area where we have really good supply to defend against the downside move, and where I would expect responsive buyers the first time. Globex low is normally a great place to trade or to try to take a trade. It's in thin air today, so I'm not taking a trade unless I see some other setup that I normally don't talk about. It would have to be something different, and I wouldn't call it, and I won't take it automatically. So I will take a long here. Depending on where we rotate down before we test it, I will probably take a short and willing to take a loss at Globex high, but I will not call it, and it is aggressive. I will not be shocked if I hand 2 points to the market taking a trade here, right? It won't even shock me if I hand 2 points and then watch it come down anyways. That's part of the price for trading with a tight rotation. And at this point, 1867.50 would only be a 3-point rotation, so I'm not calling it. On the upside, again, because we have such thinly auctioned area, the thing that's helping us most in this area is that this is a 50 to 60% retrace area, and it would make sense for us to roll back to the downside. I'll be taking a short here. I'll be taking a short here. Actually, in each one of these zones, I'm willing to take a short in this area. This area in between here, the 79 and 84, very poorly auctioned again. And keep in mind, this was simply Friday's high, but above here, it was also poorly auctioned, and we could zip through this area. So if we get rejection, I'd rather see rejection here than try to find rejection up here. I hope that makes sense. That's how I'll be taking the trades at any rate. So that would conclude the executive summary portion of this. Now, in order to get downside, okay, talking about downside, a couple things have to happen. Yesterday I pointed out pre-market that, where are we? I'm having a hard time with this. We didn't get up here, that's why. I pointed out pre-market and I simply said the trend line up coming from Tuesday's low, right, to the last swing low needed to be penetrated to the downside to get any downside move. If there was no penetration of this trend line, there was no downside move. This trend line is sitting right here, okay, this morning, and so you can expect a first move into here. Everyone and their brother saw everyone be responsive off of this line. My guess is first time we get to this thing, you're going to find responsive buyers back to the upside. It's also going to be in a support resistance zone. If this flushes, meaning if we come through and we get to this zone, there's no pause, and it just flushes through, you know something's changed, and you can change your attitude in terms of looking for further downside. If this doesn't get penetrated, technically you could go with yesterday's trend line, which you could draw like this as a backup measure. I guess it would look like this. Okay. Technically, this could still find support and push back over, but if this one breaks, this one has more weight because it comes from, this will now be the third day into this trend line, and it is very common to see them come in, break, perhaps find support here, backside test, and then push lower. Would be very common. Again, I don't trade off these trend lines, but they do help me get structure and understand direction, so I hope that makes sense to everybody. Let's see if there's anything else that I'm missing here this morning, because I think I covered where I'm trading. Bigger picture, let's switch to that really quick. Okay, so if you look, we had an old uptrend line going right here. Let's get rid of all this crap since it's a copy. Okay, there we go. We had an old uptrend line and it went like this. Essentially from here to here. See how we backside tested both of those? Backside tested on hourly here, backside tested hourly here. We're sitting right against that. That's where we closed yesterday. So we're basically right in the middle of the range. Again, that gives me more and more concept that we might roll back to the downside. So be cognizant of that we're backside testing this broken uptrend line. Okay, and I'm sure that if we look further back, this connects further back here. So again, I'm actually looking for a potential trap trade to get us to move back to the downside. And don't forget also, a lot of people want to go right back into bull mode. Okay, just like when we were trading here and we had these moves like this, where this looked like we were going to come back and make a high, then we rolled over to come back down. Don't get confused. Look how strong these moves were to the upside. These are big. Just to give context, 1840 approximately, all the way up to 1865, 25 points, right? Then we went from approximately 70 all the way down to 1838. So that's close to 35 points down. This move has been from roughly 1830. Now we're back up to 1865, 35 points moves up, okay? So that's been about the structure of the up and down move, with the exception of this one last burst that we got. Also, if you get an AB equals CD, I think it's important that you recognize that, how much time do I have? 8:23. Give me just 1 second to draw this. And y'all can do the same on your chart, very easy. Okay, if we had A, B, this is just one possibility. Right click, new parallel, and we take it. Obviously it's not going to want to do, what was the high here? It was right here, roughly. That's as close as I can get it. So if we get an AB equals CD, that would put us right down here in this 1804 to 1806. And I can tell you, without even looking at it, because I've been doing the charts for a long time, there is a support area right here at 1806 to 1804. Okay, and hopefully we don't get a CD equals 2 times AB. Okay, so this is entirely possible. I'm not saying it's probable, but it's possible, right? The flip side of that is we're simply going to make a mirror image move and come back to the highs. I don't see it, but whatever. By the way, if we get above this trend line, right, if we trade above and backside test, we can move right back to the upside. Let the market guide you. It's not that hard to figure out. You just don't have, all you have to do is not have a preconceived notion of where the market's going to go in order to make this work. Let's take a look. Yeah, David asked if I've mentioned where I'm trading the longs. Sure, I'll be happy to show that. Hold on a second. I may not have. Okay. So on the long side, again, I'm probably passing on Globex low, and I'd be willing to take a shot in this 1855 to 1853, assuming we hold up, which it looks like we will. Where it looks like we're opening at 1864. I'll take a long first time into this zone. At Wednesday's low, I will take a long again. That would be a nice red rotation here, and I'll take a long at 1840 to 1838. The only area below that I was concerned about taking a long was this 1831 to 1839. Even 1834 should give us okay, so here's the problem. Let me actually include that for both of these. Both of these have been well tested, okay? So there is no open gap sitting here anymore, which is why I believe we got such a strong responsive buy the first time out. So these two areas, if anywhere area is questionable, it's these two. However, I think we can still find responsive buyers first time in here. I think if we get into this zone right here, traders will be much more nervous and more likely to try the 1825-27. There's also a zone that I don't have on the chart, but essentially 1819.50 to 1821.50. There's a zone there, and 1814 to 1816. 1811 is an area all by itself. There's not really a zone there, but there was small resistance. Then the bigger ones, 04, 06, 79, and 81. But basically everything below Wednesday's low, with the except I'm a little more cautious in this area, and I'm probably not taking a trade at 1831, 1829. They're going to have to do it without me if they reverse it from that standpoint. Also look at your ranges, right? So up and down, we're at 1865, 30 down will put you right into this 1835 zone. It's been pretty hard to get plus down more than over positive 30, and you're going to need NQ to lead you to the downside. It's 827. I just want to cover NQ really quickly so we have a clear picture of it. Where are we on this? Okay, quite clearly. Okay, we are still making a series of lower highs and lower lows on a daily basis. Okay, although we've started to one time to the upside, we take our handy Fibonacci tool, and we have two ways we can draw this. We can start this from the top and move down. We're right at 50% back there, and if you look at a bigger picture, there's a bigger picture. Get rid of all this crap. And we go from here to here. And if you look at it this way, we still have a little bit more that we can climb before we're in this range. It could push us all the way up to 36.33 before we have a true 50% retrace from top to bottom. So keep that in mind. There is room to the upside. I would look for NQ to lead up. NQ was stronger yesterday than EOS was. Initially to the upside, I would look for them to try to revisit that. If I see that that strength in NQ is gone, I'll start pressing more to the downside. So anyway, that's all I got, guys. It's 2 minutes. I want to go and make sure all my systems are up and running. Just follow your rules. One or two, all you need is one or two trades for 1 or 2 points a day to build your trading account. You get stopped 2 times in a row. I stop trading. That's what I do. If I get stopped 2 times back to back, I keep my stops reasonable so I can have a good day. The other day, everyone saw me. I hit a 5, 10, and 12 point scale trade. That was pretty straightforward. I don't think I've had a losing trade since that Thursday where I took 2 stops back to back. In terms of anything that I've been throwing up on Stock Twits and Twitter. So you don't have to nail it every single day. You don't have to trade every day. If you'll let the trade come to where you have the highest odds and run it as a business, if you were running a business, you wouldn't take a deal you were going to lose money on. That'd be stupid. Do the same thing here. Look at it as a business prospect. Is it giving you a good location and high odds to pay you a profit? If it is, take it. If it's not, it's not a casino. Hell, if you want to, have fun, go to Vegas. At least good-looking women will serve you alcohol while you're losing your money. This way, just let the trade come to you, let them pay you, and you can go from there. So, anyways, guys, if you have any questions, you can hit me on StockTwits or Twitter or email me. I hope everyone has a wonderful day. I'll make comments as I see appropriate. We'll talk to you later. Bye.